Hello, can you hear me now? Thank you very much for that feedback. That is why I always want feedback so that I don't get caught up in a trance, open thinking that you're all with me, right? All right. So thank you very much, Carrie. Thank you, Seba090 for that feedback. Ade007, hi, how are you doing this morning? All right. So thank you very much. So I'll take this as a positive feedback that we are good to go this morning. So excited to welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market together using technical parameters to identify trading opportunities that we can take advantage of during the New York session today. And for those who are joining us for the first time, I'm so happy to welcome you on board. It will be a wonderful moment to have you guys around. And what we simply do here is to gather here as a community in anticipation of the New York session, of course, review the pairs that we have been monitoring since the beginning of the week. So on Mondays like this, we have a couple of random pairs that we normally choose, and we review those pairs, and throughout the course of the week we come here to review and see how we can manage our existing position as we get prepared for the New York session. I can understand it can look a little bit overwhelming at first since this is your first time with us, but I assure you that with time you'll get to understand how this works, and you will be able to use the information you have gathered here to make your own individual and personal decision on your own portfolio. So I welcome you once again, everyone, and let's dive right into the business for today. And you all know how we do it here. So every morning we want to check on the economic calendar to keep tabs with the fundamental aspect of the market. And looking at the economic calendar this morning, I was able to pull out a couple of high impact events that will be affecting one of the instruments that we are monitoring, and that is from the US economic docket. And we have in about 2 hours 30 minutes from now, we have the durable good order, which is usually released by the US Census Bureau, and this data gives us a measure of the cost of orders received by manufacturers for durable good, and this means goods planned to last for 3 years or more, such as motor vehicles and appliances. And we have a data here that came in, the previous data came in here at -1%, and we have a consensus projection of 0.8% for today, which is looking more on the positive side for the dollar, maybe, but we'll still need to wait for the actual data to come in to give us a clue of what will really happen on the US dollar across the pairs that we are monitoring so far this week. Then that same time as well, this is happening simultaneously, is the non-defense capital goods order excluding aircraft. This is the measure of cost of orders received by manufacturers for capital goods. These are durable goods used in the production of goods or services, and these are goods planned to last for 3 years or more, excluding defense and aircraft sector. So this is another high impact event, which also gives us a clue into the health of the manufacturing sector in the US economy. The data here, the previous data here came in at -0.1%, and we have a projection of another 0.2, which is another positive sign regarding the manufacturing sector of the US. So will the data that come in later on today come in as expected, below expectation, or beyond expectation? Then we shall be seeing that when the time comes. But before that happens, we will definitely going to be seeing the reflection of the anticipation of this event on the chart as price action, and that is what we are going right in to study to see how we can position ourselves in such a way that we can catch any potential trading opportunity during the New York session today. And there is one other thing that came up yesterday, which is also sending some market influx in the market, causing some indecisive situation in the market too as well, as we got to learn yesterday that the First Republic Bank shares fell about 27%, and this was as a result of customers of the bank withdrawing over $100 billion of their deposit in the last quarter, and this was as a result of the turmoil that happened at the beginning of last month in the banking sector. And this is another dent into the banking sector of the US, and we might likely be seeing, we are already seeing that reflect on the chart actually, as the dollar continues to struggle amongst its peers. Then next week we are looking forward to the Federal Reserve, which they will be meeting to decide the next move on the interest rate, so with expectation that it will raise them by another 0.25 percentage point. So these are events that majority in the market are looking forward to, and this has caused a little bit of risk averse in the market, and this is why the dollar has been struggling, at least in the last couple of days in this market. So we are going to be taking all this into consideration while we look at the current market structure to decipher what our next line of action will be. So on this note, and with the information we have gathered here, let's dive right into the chart and let's see what is happening here. So as usual, the first commodity we are going to be looking at this morning is the US oil. I can see some comments. Let me acknowledge this. 435, good morning to you. 780, good morning. 828, good morning. 893, Nova, I see you. 466, good morning to every one of you, and I'm so excited to be around to have a beautiful moment with you guys. So let's dive right into the US oil chart. So as at the beginning of this week, we had this whole situation where price action was caught within this channel between the $77.65 level and the $77.69 area to give us that indecision phase at that point. And you all know what we look out for whenever price action falls into this kind of phase. We want to wait for price action to either break out or break down of that channel for a trading opportunity. And with our buy stop and sell stop order placed at both ends respectively, we had our first buy position for the week triggered as price action broke out of that resistance point for the first time this week to give us that buy position we had. Then we also had a second buy position triggered at the breakout of the $78 level, as this was discussed on Monday that we should have a buy stop order above that structure. And with the whole situation we have here, the first position moved about 150 before the bearish momentum began, and the second position moved about 100 pips before this whole situation happened. So during the first day of the week, we were already profitable on the US oil, as we were able to scoop some profits before this bearish momentum took us out of our position. And during our live session yesterday, that was Tuesday, during our live session yesterday, we had this whole structure figured out after we saw price action climb into the $78.85 level, where we begin to see the resumption of selling pressure. And there's one important thing about that structure: it shares a beautiful confluence with that bullish trend line that has been supporting that bullish momentum. And for the sake of those who are not part of our live session yesterday, let's quickly run through the 4 hours time frame so that we can see the significance of that trend line. So here we are on the 4 hours time frame, and this is what we saw on the 4 hours time frame. We can see that since the mid-month of March, we have seen our price action has been consistently finding higher lows in this market, and this is more evident after we connected the series of higher lows here to give us this bullish trend line. And one interesting thing happened here on Friday last week when we saw price action break down that trend line for the first time in 6 to 7 months, giving us a clue that sellers might likely be coming in. And one thing we saw here, this is where I was talking about on the 1 hour time frame, which I needed you to see so that you can also have a hint into why we are making the decisions we are making on the 1 hour time frame. So we saw the situation that broke down this trend line here, and you all know from a technical standpoint, whenever price action breaks down a key structure like this, we expect that one point in time price will come back and do a retest of that structure to incite another wave of bearish momentum. And all this was taken into consideration while we were doing our analysis on Monday, and that was why we identified the TP target zone sitting between the $75 level and the $70.50 area, as you can see here. But we still needed more confirmation to be part of that move, and as you can see, we saw the retest of the structure yesterday, triggering a bearish momentum. And during the live session yesterday, we said we are not going to be jumping into that sell move right away, as we still need some confirmation to happen. So right back on the 1 hour time frame here, we said we are going to remain patient to see how price action will be reacting to the $78 level, which happened to be the neckline of the potential reversal pattern we identified earlier. And at the same time, this level is serving as our key level for this week. And you know what we do whenever we identify key levels like this? When price action remains above the key level, we look out for buying opportunity. But if price action breaks down our key level, we look out for selling opportunities. And yesterday I said that it depends on how price action reacts to the structure that will determine what we are going to be doing. And we agreed that if price action drops into the key level and we start seeing buy pressure resume above the structure, we look out for buying opportunity. But if the opposite happens in such a way that price action drops below the structure, selling pressure resumes below the $78 area on our lower time frame, we want to be in for a bearish move. And this was exactly what happened during the New York session yesterday. As if you see, let's scale down to the 5 minutes time frame, and this was where the whole situation started during the New York session yesterday. So this is the key level here. So we saw the breakdown of the structure here. Price action came back to do a retest of that level, which triggered our sell position yesterday. And in fact, we were part of this move all the way to the downside as price action moved. Let's see how many pips is that. Price action moved about 150 pips in our favor before this bullish momentum began. And I hope you moved your stop loss. You know what we normally do here in this community. Whenever price action move considerably well in our favor, we want to be moving our stop loss accordingly to lock in some profit. And I hope you did that. If you had done that, at least you would have scoped in some profit in that regard. Now, with the situation we have right now going into the New York session today, and mind you, for those who still have a sell position running at this point, it is appropriate that you secure your current position anywhere above the $77.65 level. Seems most appropriate at this point. Now, with that being done here, what is going to be our plans for today? Now, if you look at the structure critically from what has been happening since Friday of last week, one thing that you will notice first of all on this chart is the fact that we have been seeing some buy pressure around the $77.69 level. Now, if you look at what happened here on Friday, we saw that selling attempt here was negated by buyers. We saw the same thing happened at the beginning of this week too as well. And in fact, during the New York session yesterday, we also saw multiple rejection of that $77.69 level to incite that signal that buyers are very, very strong at this particular point in time. So as a result of this situation we have here, we have identified a demand zone between the $77.69 level and the $76.50 area. So we have a very beautiful demand zone at this point, and as long as price action remains above this demand zone, we will be looking out for buying opportunity at this point. Now, with the whole situation, I can see some comments here. Okay, let me quickly run through this. Side Desire wants us to do silver and gold up and down. Is that what you mean? We are going to be checking on that. We're going to be checking on gold in a moment. Hey, Miyagigi, how are you doing today? How are you doing? It's been a while since I saw you. Trust you are doing well. Seba09 says what it says about gold and silver. Well, we have not talked about gold yet. We will be talking about gold in a moment, so stay tuned in so that you don't miss out on that session. So sorry for the breaking transmission. Let me dive back into the chart. So right now, what we are saying at this point in time is that as long as price action remains above that demand zone, we are going to be looking out for more buying opportunity in this market. And remember what we said on the at the beginning of the week. Remember, we initially identified a double bottom structure after taking into consideration the impulsive move that brought us to that support line here. So this was what we saw at the beginning of the week. We saw this whole situation giving us something that looks like a reversal pattern in the form of a double bottom structure, where we had our neckline sitting at the $78 area, and we were hoping that price action will break out of that structure, which gave us the privilege of being part of that buy position at the beginning of the week. And obviously, and from a technical standpoint, whenever price action breaks out of a neckline, we expect that one point in time price will come back to do a retest of that structure. But with the look of things right now, we saw our price action drop back into the demand zone we identified earlier, and since then we have been witnessing some buy pressure from that area, further emphasizing the strength of the buyers at this particular point. So will this whole situation incite another wave of bullish momentum at this point? Well, for me to be buying the US oil today, I would rather see price action break out of that neckline one more time at the $78 area to join this bullish momentum at this point. And in that regard, we are going to be having our buy stop order anywhere right above the $78 zone to be part of that move to the upside. And if that happens, we want to have our stop loss somewhere around the 76.50 level, or the $77 area, which will be dovetailing to about 80 pips thereabout. Of course, the stop loss is quite wide, and the reason why that is simply because of this whole situation around this area. So we need to take all that into consideration. As you can see, price action has been choppy between the $78 area and the $77.50 level since the beginning of this week. So we need to be very, very careful around this area. So let's give a lot of room for price action to breathe, and I'm very sure that this whole structure will definitely give us multiple entries as time goes by. And we also have a structure here at the $79.50 level, where a breakout of that structure definitely will be giving us more opportunity to add more position to our existing trade. So that is how we are going to be buying the US oil for today. So anywhere above the $78 level should give us that leverage to be part of a bullish momentum. Now, in as much as we are looking out for buying opportunity in this market, you know how we do it here. We don't want to be too rigid. The financial market is a very fluid environment, and for us to make profit off the market, we want to be as fluid and flexible as possible. So if we have a bias, we want to also take into consideration the opposite of that bias, so that whenever it happens, we are going to be on standby to catch that move. And in that case, in this whole situation that we have here, what do we want to see on this chart that will give us the confidence to be selling the US oil? So if price action does not find higher highs as projected here, and instead it continues to drop to the downside, I would rather see price action break down that demand zone to give me a signal that we are going bearish. And as soon as the breakdown of that structure happens, we want to scale down to our lower time frame. Remember, we are not getting too excited. We are not having a sell stop order there, as we still need some confirmation to happen. Because if a breakdown of this demand zone happens, it could still turn out to be a false breakdown. So we need some confirmation to make us know that this breakdown is actually a true one. And for us to see a true one, we scale down to our lower time frame, then we look out for a retest of structure. Where price action does a retest of that demand zone, we see signs that buyers are finding it very difficult to climb above that demand zone, which will reflect on the chart as selling pressure right below the structure. Then we will be in for a move to the downside. And remember, at the beginning of the week, we had a very wide TP target zone, which was identified on the daily time frame, which is right within the $75 level and the $70.50 area. And for the sake of those who are not part of the live session, you might be asking, how did we decide, or how did we get this TP target zone? Well, what we did was, from a higher time frame, we used the 4 hours time frame to decipher that. And what we did was to consider the impulsive move that got us to the highest point price action had been for this year. And when we did that, we had this impulsive move, and we can see that this retracement phase here, this whole choppy situation here, could probably turn out to be a retracement of that impulse leg. So what we did was to bring out our Fibonacci retracement tool, run it through the previous impulse leg, and obviously we want to be aiming at our golden zone area, which always falls within the 50 and the 78.6% of that previous impulse leg. And that is how we got that TP target zone that you can see here. So what we are simply saying at this point is that if price action takes out the demand zone here, then we look out for selling pressure to join the move to the downside. And this same old TP target zone also has a potential of inciting the second wave of the bullish momentum that started last month. And to be part of that, we want to see some sharp rejection of this area. Price action could transition into a reversal pattern. It could be a double bottom structure, head and shoulder pattern, whichever case it may be, breakout retest of structure, then we could be part of the trend continuation to the upside. So these are things that we are going to be looking at today, but it will take quite a time before price action gets into that level. So let's be on standby to catch either of this opportunity. So in summary, what are we saying on the US oil? So what we are saying on the US oil is this: we have two key levels that we are going to be using to guide our trading activity for today. The first one is the $78 level, which is where we are looking out for buying opportunity if price action continues to the upside. And the reason why we are buying is simply because of this big demand zone that we have here, which has been negating all attempts by the sellers to break down that structure. And if we are going to be selling here, we want to see price action take out this demand zone, breakdown of structure, scale down to your lower time frame, then we look out for selling pressure here to be part of the move to the downside. So this is how we are going to be trading the US oil for today. So I hope you be on standby so that you can catch this opportunity when it finally happens. If you have any question, let me know in the comment section, and I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next pair. Hello Zago, good morning to you Zago. Susie MB, how are you doing this morning? All right, so in the absence of no questions, I want to assume that we're on the same page, so I will be moving on to the next option. So the next option we shall be looking at this morning is the US tech, and it's quite interesting that we had a sell position running yesterday, and this was as a result of price action moving just as expected, just as projected during the live session yesterday. So now let's quickly run through what has been going on in this market. So at the beginning of the week, we saw how sellers were trying to make a statement in this market, as we first of all saw this whole situation where price action started the week at the 12,985, dropped into the 12,930. Then we had this whole situation during our live session on Monday. We had this whole flat channel figured out, and you all know what we do whenever price action forms within this kind of channel. We want to see price action break out or breakdown of the channel for trading opportunity. And with our buy stop order above the 1,985 here on Monday, we saw this buy position triggered and price action actually moved about 60 pips in our favor before the sell pressure resumed. And since we normally move our stop loss as soon as price action moves in our favor, we were taken out at a worst case scenario of break even. Then that same day we saw this breakdown of that neckline, sorry, of the 12,930, which I told us all that we are not going to be jumping in right away, as we still need some confirmation to happen before we go in on that trade. And the reason why I said we are not going to be having a sell stop order below the 12,930 was simply because of this demand zone that we had identified here at the beginning of the week. So we said as soon as the breakdown happens, we want to see price action do a retest, come back into structure, selling pressure resumes before we join the move to the downside. And as at yesterday's live session, we had a sell position triggered running at that particular point in time. And during the live session, we were around the 12,930 area, where we said if a breakdown of the structure happens, that is the demand zone, at the 12,890, we are going to be part of another wave of bearish momentum to the downside, where we also identify the 12,800 level as an area to add more sell position to this trade. And luckily enough for us, we can see our price action moved yesterday, and it moved about 170 pips in our favor before this whole bullish momentum happened. Then the second position from the 12,800 level also moved about 80 pips before this whole situation happened. And I do hope you moved your stop loss accordingly to lock in some profit, as buyers, the bullish pressure that came in would have taken us out of that position at this point. So we were able to scoop in some couple of profits around that area. Now that we are going into the New York session today, what is going to be our plans on the US tech? Well, from a technical standpoint, and if you look at the structure critically, you will agree with me, it is a very, very simple setup to trade. And why is that? Now, remember we had this demand zone identified yesterday around the 12,890, which has been a strong buy niche in this market for like 3 days in this market. And during the live session, during the New York session yesterday, we saw the breakdown of that demand zone finally. And with this whole situation, we all know what we look out for whenever price action breaks down a key structure like the demand zone here. We expect that price will at one point in time come back to do a retest of that structure, where the appearance of selling pressure around this area is likely going to be inciting a trend continuation to the downside. And if you look at the structure we have here since the early hours of today, you would have noticed how sellers had continued to negate any attempt by the buyers to climb back above that demand zone. And with this whole situation, with this whole continued selling pressure here, our previous entry point will still remain valid, as a breakdown of that structure definitely should have triggered a sell position at this point. And for those who are taking advantage of this move right now, well done to you, as you will currently be in profit of about 20 pips in profit right now. So let's see how far this retracement phase will go. Remember, our stop loss is somewhere above the 12,930 as we continue to monitor this price action. And remember, we still have a key level at the 12,800, which we are also going to be using to guide more trading opportunities in this market. So let's see how price action will play out on the US tech here as we continue to monitor this price action. So it has been bearish since the beginning of the week, and I hope that price will continue to go to the downside, breaking down the previous structure. So if price continues strongly to the downside, we also have a lowest point here, which is the lowest point price action had ever been this week, and that is the 12,720. So let's label this area for the sake of clarity. So we have the 12,720 level, which appears to share a confluence with that bullish trend line that you can see here. So if a further breakdown of the structure happens, we want to be adding more position to our existing trade. Now, before I close on the US tech, I want us to run through the daily time frame, especially for those who are not part of our live session earlier, so that you can have an holistic view together with us on what led us into selling yesterday. So if we scale up into the daily time frame, this is what we saw at the beginning of the week. So we acknowledge the fact that price action has been bullish this year, and this had led into price action transitioning into this ascending channel that you can see on your screen. So we connected the series of higher highs, giving us the resistant line of that ascending channel, and then we connected the series of higher lows here, which has given us the support line of this ascending channel. So you will agree with me that it has been very bullish since the beginning of this year. And to further emphasize the strength of the buyers in this market, we saw the breakout of the $12,800 level, which happened to be the first time price action will break out of the structure in the last 5 months. And since the breakout of that level, it was a very beautiful sign that we might be in for a bullish momentum. However, something interesting happened here during the course of this month, as we saw that buyers were finding it difficult to break out of the ceiling at the 13,220 level, giving us a new resistance line. And with this whole situation here, we can see that price action had been caught within a range, which further emphasized the indecision in this market. And with this whole kind of scenario here, you all know what we look out for whenever we have this kind of flat channel. We want to remain patient to be part of a trading opportunity if price action breaks out or break down that channel. And at the beginning of the week, we deliberated on this, that we are not going to be waiting for a breakout to happen first or a breakdown to happen first before we trade, as we need to scale down to a much lower time frame to see how we can actually catch that move even before the breakout of any of the structure happen. And thank goodness we were able to take advantage of a bearish momentum, and it looks like price action is tending towards breaking down that key level at the 12,800. As you can see, buyers are finding it very difficult to maintain that momentum above since the breakout of that 12,800. So with a sign that we might likely see, though we have a hammer candle here, but it still gives us a sign that sellers have got gradually gaining some ground right below the 12,800. So if they can break down at one point in time, then it shows that they have a tendency of actually going through that structure at any point in time. So at this point, if we look at it from an holistic point of view, we want to see a breakdown of the 12,800 to join a decline. But we could actually join earlier if we scale down to a one hour time frame, which we've already done, and we've already identified that simple setup that we want to be using to guide our trading activity for today, which is just right below the 12,890, and we are already in this trade already. So for those who are already in this trade, congrats to you. Let's see how price action play out going forward from this point, and we shall be seeing tomorrow to review how well this pair has been doing so far. And in as much as we're looking out for selling opportunities as well, we also want to consider if the buyers have any potential in this market. Well, if you look at the structure here and consider what has been happening in this market since last week, you will see that price action has been strongly bearish in this market, and to further emphasize that is this bearish trend line. So I doubt if the buyers have any potential at this point, especially after a very strong demand zone here was broken during the New York session yesterday. But if a bullish momentum will happen at any point in time, I would rather see price action take out this bearish trend line, that is, give me a sign that the trend line is no longer strong enough to resist any buying pressure. And if that happens, then we want to be looking out for buying opportunities above the structure to be part of a move. But I doubt if that will be happening. But if it does happen, we want to be on standby to catch that move. So that is my view here on the US tech. Let's see how things play out in the next 24 hours, and we shall be coming back here tomorrow to review how things have gone so far. If you have any question, let me know in the comment section. So moving on now, we are going to be going into the GBP USD, and personally I have a buy position triggered currently, which I'm still very doubtful about, as I still need another breakout of this structure here to give me that confidence needed to maximize the profit on this one. So let's run through what has been happening in this market since the beginning of this week and how we have been trading the GBPUSD so far. So right now, at the beginning of the week, we saw our price actions initially started on a bearish note, as we saw how price actions started at our key level at the 1.24550 level. So we saw selling pressure resume here, bringing price back into the structure here at the 1.241, making that area our support line for the week. So we had this whole consolidation phase happen at the beginning of the week, and we were looking forward to price to break out or break down of this channel for trading opportunity. And luckily enough for us, during I think a couple of hours into the New York session on Monday, we saw price action break out of the resistant line at the 1.24550 level to trigger our first buy position for the week. And we had this move all the way up as price action moved in our favor, moved about 58 pips in our favor before this bearish momentum happened. And you all know what we do. We move our stop loss accordingly to lock in some profit so that we can secure the current position we are having. And when the selling pressure came in, at least we would have been taken out with some small profit, though it wouldn't have been very significant. Now, during the live session yesterday, we had a new whole setup that we said we were going to be using to guide our trading activity. And that was the situation here. We considered the breakout of the 1.24550 level, which was here. And we said after a breakout of structure, we expect that price will still come back, do a retest of the structure, and the appearance of buy pressure will incite a trend continuation to the upside. So this was one of our perspective here yesterday, and we saw this whole situation happen during the live session yesterday. And unfortunately, when we identified the setup on the 15 minutes time frame, let me show you the 15 minutes time frame so that we can see what I'm talking about here. So we had this whole structure, we identified this trend line here, and we said if price action breaks out of the trend line, then we will be in for a buying opportunity. But that did not happen, as you can see. So the all buying expectations was negated at the site of the continued selling pressure. And with a sell stop order below the 1.24550 level, remember this was a trend line which has been supporting the bullish momentum since last week. And we said if price action breaks down both the trend line and that key level at the 1.24550 level, we are going to be in for a bearish move. And this was exactly what happened. Exactly immediately after we ended our live session, we saw price action move about another 67 pips in our favor before this bullish momentum happened. And I hope you moved your stop loss to lock in some profit as price action is being monitored. So we were taking out again with another small profit on the GBPUSD. So it has been a choppy situation on the GBPUSD so far this week, and this is as a result of the high impact economic event we are expecting today, and at the same time the whole event surrounding the US economy as regards interest rate decision coming up next week, and the one that happened lately, the First Republic Bank shares falling about 27% as a result of the fear that the banking consumers had as they moved their funds from the regional banks to the national banks, hereby losing about $100 billion from their portfolio. And this is like a dent to the US economy, and as a result of this, we see some traction in the pound sterling in that regard. Now the question right now is, will this traction continue to hold for the pound sterling as we head into the event coming up in an hour? That's the dilemma we have right now. But the fact that price action has broken out of our key level at this point at the 1.2455 level, I was of the opinion that buy pressure could continue at this point. But before I go into the details here, I want to share with you the thought process that led into the decision I just made by buying above the 1.24700 area. Now, if you look at what has been happening since the beginning of this week, at end of last week, we saw our price had consistently found higher lows in this market, giving us a bullish momentum. However, yesterday we saw the breakdown of that trend line happen, and personally, technically, when you look at this whole structure, you expect that when a breakdown of a key trend line like this happens, we expect price to come back into the trend line to incite a trend continuation to the downside. But instead of seeing selling pressure right below the trend line here, we saw price action broke out of that trend line with a massive engulfing bullish candle to signal the presence of buyers at that point. And so with a breakout of the 1.2455 level, I was the opinion that I will be buying if price action goes on to break out of that 1.247, which has been a major determinant of price action since the beginning of this week. And as a result of this, I bought above the structure with a stop loss somewhere below the key level here, with about 20 pips thereabout on that one, hoping that price action will continue further to the upside. And if you had been part of this move as well, kudos to you for being on standby to catch that one, and let's see if price will continue to the upside. But remember, I have a sell stop order below the 1.245 just in case price action drops below, and this whole movement we see here in the last couple of hours could turn out to be a false breakout. So it's a risk worth taking for me. I just decided to take it, and let's see how far this one will go. And for those who had missed out on this one, well, we need to be very patient at this point. We don't want to jump into a moving train, as we still need some confirmation for us to be clear that price action will continue to the upside. And at this point, since we've been seeing some rejection of the 1.24850 level here in the last couple of hours, we might want to identify that structure so that we can also use it to guide our trading activity for today. So if we're going to be acknowledging that, so we have something like this. So we have something like this. You can also see that it has been a major determinant of price action in the past, and you can see selling pressure. We've been seeing selling pressure here. So if you had missed the buy opportunity there, then we want to see price action break out the structure, not just break out and retest the structure. This will give us a confirmation to join. So we want to see breakout and retest of that level for us to be part of that move. So whenever it breaks out that level, we scale down to our lower time frame. We look out for something like this, and if we see something like this, then we know we are good to go. And in fact, if something like that happens, it will also share a confluence with our trend line, further emphasizing how important the trend line is for the buyers in this market. Now, if a further breakout of this whole structure, let me label this for the sake of clarity. So we have this at 1.24850. So there we go. Then we also have a structure here, which is the highest point price action has been this week. And that is the 1.25550 level, I guess. Is it 1.25060? 1.25060. Okay, so that is it. So we also have another structure there, which we can also continue to add more position on this one. So these are the structures we are going to be using today to guide our buying opportunity in this market. So let's see how price action plays out from this current structure. And like I told you, I have a sell stop order below this level at the 1.245 being our key level for the week, and currently trading below the trend line. So if at any point in time price action takes us out of the buy position and continues drops below the 1.247, we continue to see selling pressure below the structure, then we might be in for a bearish move to the downside, as price action will now be back below that trend line that has been holding that bullish momentum. So let's see how this is going to be playing out. We already have a breakout of the 1.24850. Now in this kind of scenario right now, what you want to be doing is to scale down to a much more lower time frame. Let's say the 5 minutes time frame. This is the trend, this is the line that was broken right now. So we want to see something like this breakout, then we start seeing retest of structure, signs that sellers are finding it difficult to climb below, then we will join the move all the way to the upside. So this is what we are going to be looking forward to after the breakout of that trend line. Now, so let's be patient if you want to be part of this move on the GBPUSD. And for those like me who have taken advantage of this move at the 1.24700 level, kindly move your stop loss right now to lock in your position at that entry point, so that whenever price action takes us out, at least we will be taken out at a worst case scenario of break even. So that is that on the GBPUSD for today. If you have any questions, feel free to let me know right in the comment section. So with that being said, let's move right into the XAUUSD. And for those who are clamoring for the XAUUSD, here we go. Sabah, are you still around? Saidizia, are you still around? So we're about to talk about the XAUUSD right now. So on the XAUUSD, let's go into, okay, this was a structure we used yesterday. So on the XAUUSD, we bought the XAUUSD yesterday, and this was the setup we were using to guide our trading activity as at yesterday. So during our live session yesterday, we were around this point. Hold on a second. Okay, we were around here during the live session where price action was around the 1,982. So we had a sell position triggered here. Price was around this area, and we saw this old bullish momentum that climbed back to the upside. And remember what I said here during our live session yesterday, that we are going to be buying only if price action breaks out of the 1,991. And with our buy stop order above the 1,991, we had a buy position triggered, and currently, if you're still in the buy position, you will currently be running with about 80 pips in profit. And at this point in time, the first thing I'll tell you to do right now is to secure this current position by moving your stop loss accordingly. And the reason why I said we should be moving our stop loss is simply because of this old situation we are seeing around the $2,000 mark. Look at what has been happening since the beginning of this week. We have been citing selling pressure around the $2,000 level since the beginning of the week, which further emphasized the strength of the sellers at this point. So every attempt by the buyers to break out of that structure has been met with strong resistance from the buyers. So we need to take this into consideration. Hence, we need to move our stop loss on this current position by locking in some profit anywhere right around the 1,995 seems most appropriate to secure this position. Now, if we are looking forward to buying the XAUUSD today, I want to see a breakout of the $2,000 level happens. First of all, at this point, I'm not having a buy stop order around this area right now. I've changed my mind. And the reason why I said this is because of the nature of the weeks around that $2,000 mark. You can see sharp rejections, giving us a clue of how strong the sellers are at this point. So I would rather see price action break out the $2,000 mark. First of all, close above that level. As you can see, since the beginning of the week, price is yet to close above that $2,000 level. So I want to see price break out of the $2,000 mark, close above that level. While I'm on my lower time frame, like my 10-15 minutes time frame, look out for signs that buyers are gradually gaining momentum. As we continue to see buy pressure above that level, then I want to be joining that bullish move to the upside. This is the only scenario I want to see here to be part of a bullish move and a trend continuation to the upside. Now, in as much as we are looking out for buying opportunity, we cannot ignore the potentials of the sellers here. And as you can see here, in the last 48 hours, we have been seeing strong selling niche around that $2,000 mark, which might likely incite a sell-off in this market at any point in time. And in order to be part of a bearish momentum here, I will position myself right below the 1,994, which happens to be the support line here in the last 18 hours. Now, since the breakout of the structure, we have seen how this level had consistently rejected selling pressure in this market. So if at any point in time price action breaks down the 1,994 50-cent level, selling pressure below the structure, my lower time frame will welcome a selling opportunity in this market. And we'll continue to look out for more opportunities to sell if price action breaks down the 1,991 level. Then we also have structures right below. We have the 1,988, we have the 1,985, which also shares a confluence with that bullish trend line, where it's very important that we see how price action reacts to that level, and that will determine if we are going to be adding more sell position or getting ready to join a bullish momentum at that point. So these are my views here on the XAUUSD for today. So we look out for buying opportunity above the $2,000 mark, and we look out for selling opportunities below the $1,994.50 level. And remember what I said, for those who are still running in this buy position, kindly move your stop loss, lock in this profit, as we don't want to lose out on this move to the upside here. So let's see how we can secure this position going forward. So that is that on the XAUUSD. If you do have any questions whatsoever, feel free to let me know in the comment section. So with that being said, on the XAUUSD, I will be moving into the last pair for today, which is the USDJPY. And on the USDJPY, we have been selling the USDJPY in the last 24 hours now, as you can see. Finally, we have our potential reversal pattern on the daily time frame, looking like it has been negated at this particular point in time. Before I go into the details here, it's very important I show you the daily time frame so that we can see how important this 133.800 is based on this current market structure. So we identified this setup on the daily time frame at the beginning of the week, where we suspected a potential reversal pattern was evolving at that point. So this was what we saw at the beginning of the week. We saw this whole situation. First of all, we acknowledge the fact that above the 131.00 level has been a very, very strong demand zone in the last 10 to 11 months in this market. However, after the breakout of this trend line, we saw price action come back to do a retest of the structure, which was a technical expectations actually, and we saw price action transition into what looks like a reversal pattern. And you all know what we do whenever we identify this kind of potential reversal pattern. We needed a neckline area, which shall be a platform upon which we are going to be looking out for buying opportunity, and at the same time the breakout of that platform will validate that reversal pattern. So we spotted a neckline at the 133.800 after using our line chart, and at the beginning of last week's trading session, we were part of this bullish momentum that's moved about 130 pips in our favor before this whole bearish momentum began. And what we were looking forward to at the beginning of this week was continued buy pressure above the 133.800 level for us to be part of a trend continuation. But as you can see, what has been happening here in the last 24 hours, we finally saw price break down the 133.800 level. Though yesterday's candle did not close down or close below that structure, it just closed right around it. And today's candle, we cannot yet conclude on today's candle, as it could still turn out to be a false breakdown that will lead a bullish momentum to the upside. Now we have a trend line here which has been supporting this bullish momentum since last month, as you can see here, and currently price action is trading along that trend line. The question right now is, will this trend line be broken to the downside to signal a sell-off in this market, hereby negating our reversal pattern, or will this turn out to be a buying zone where price will respect the trend line one more time to incite another wave of bullish momentum? So you would agree with me that we are at a critical point in the market right now, where price action is currently trading right below that our neckline and along that bullish trend line that we just identified here. Now, to have a better perspective into what is going on here, we need to scale down to a much more lower time frame, and I needed to show you this so that you can see how important the 133.800 level is when I'm explaining things on the 1 hour time frame. Now scaling back into the 1 hour time frame, let's go back into our 1 hour time frame and let's see what is really going on here. So in the last 24 hours, we have been selling, and look at what has been happening since the beginning of this week. We have seen how price action has been bearish in this market. So after bringing out our line charts, we connected a series of lower highs, giving us this beautiful bearish trend line you can see on your screen. And what this simply means is that this trend line will continue to guide our trading activity at least till the remainder part of this week. So as long as price action remains below the trend line, we'll feel comfortable in our sell position. And remember, yesterday we sold the USDJPY right below the 133.900 after it broke down, retest the 133.800, and we continue to ride the move all the way to the downside. Then during the early hours of today, I was able to spot this situation here after citing the continued buy pressure around the 133.500, and I was looking forward to a breakdown retest of that level to give me another opportunity to sell. So another position was added below the structure, and if you had also taken advantage of that 1-2, well done to you for being on standby to catch that move. And let's see how far this is going to go at this point. Will this turn out to be a false breakdown, or will it turn out to be a very good breakdown that will incite a sell-off in this market? Well, let us take a look at the first perspective we want to be looking at today. Now, to buy the USDJPY at this point, we will not buy unless price action breaks out of that trend line. Remember, we have this trend line figured out, and we said we are going to be using it to guide our trading activity today. So this simply means if price remains below the trend line, we still look out for more opportunity to sell. But if at any point in time this trend line is breached to the upside, then at that point we want to be seeing this as a signal that we might be in for a momentum shift anytime soon. And if the breakout of that level happens, we want to be scaling down to our lower time frame to look out for confirmations that will support that move to the upside. Something like a retest of structure by pressure resumes above that level, and a breakout of the 133.800 will be a beautiful opportunity to be part of the bullish move to the upside. And since we're expecting a macroeconomic event today, I'm of the opinion that the move after, if a breakout of the trend line happens, it's going to be very massive. Now, with that being said here, let's look at the bearish momentum we have here. So we already sold at the 133.800 yesterday, where price action is currently moving with about 40 pips in profit right now. And it is appropriate that for those who are already in this trade, you want to be moving your stop loss to lock in some profit. And anywhere above the 133.600 seems most appropriate to lock in some profit here, while we wait out to look out for more opportunities to add more position to our existing trade. So I'm looking forward to some signs that sellers are still strong, like a retest of the 133.500 at any point in time during the New York session today. Then we can be in for another move to the downside. Now, it now depends on how price action reacts to the 133.00 level, which is another key level we are going to be taking note of during the New York session today, that will determine if we are going to be adding more sell position or getting ready to buy. So if a breakdown of the 133.00 level happens, selling pressure below the structure on our lower time frame, we are in to add more sell position to our existing trade. So let's be on standby to catch this move, and I wish you best of luck on the USDJPY. And it's on this note I will be calling it a day here. It has been a wonderful moment with you guys, and I'm very sure we are all equipped with the right information to be able to take advantage of any potential trading opportunity during the New York session today, as we were able to simulate all the potential possibilities in this market. And I hope you screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So on this note, I wish you best of luck. Mia Gigi, I see your comment. Thank you very much, and I wish you a wonderful day too as well. Do have a wonderful evening, everyone, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. And for those who are joining us for the first time, I hope you are able to take one or two things with you, and trust me, it will take quite some time for you to get adapted to this whole process. Just be patient, and with time you'll get to understand how this works, and you will be able to make your own individual decisions using the information you have gathered here. I hope to see you tomorrow again, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs we are monitoring has been doing so far, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.